Welcome back, everybody. It's been a week and some change, but we're here. Welcome back to Crypto After Dark. Professor Keith, Carolina Keith, Keith the Simp, whatever you want to call me, just Keith. I'm cool with that too. Good to see you. Glad to have you back as well. Kind of missed everybody. We got some stuff to talk about. Not a lot of chart related stuff tonight, and I'm going to show you why in a minute. And then we're going to get into what the stream is about because I think it's high time we talk about it. First things first, if you haven't done so yet, please go hit like. Why not? They're free. Free. While you're there, hit subscribe and hit the notification bell too. Why not? Right? It's free. The more we get, the higher up YouTube pushes us in the old algorithm, the more people that'll watch. The more people that watch, the more people we can help. If you haven't done so, the Discord is free. Why aren't you there? Just go over to Discord. Type in our stuff. If one of the people would shoot up the link for Discord right there in the chat for everyone. Also, in case you want, we have a Patreon page as well. Right here it is. $8 and $16, and you could be on the Patreon as well. What do we do over there? Well, we do everything that we do here, but we do it 24/7. All right. Charts, information about real estate, business, any questions you might have about nodes. We have node setup videos, custom screen indicators, custom trading indicators. I post all of my wallet information there. I post all of my trades there. Any information, any questions I might have, it all goes on there. General Discord, I don't talk as much in there, but you can come hang out if you'd like. That part's free. The Patreon does get charged for it's $8 or $16, $16 unlimited. Everything unlocks, and if you buy a year membership, you get 10% off. There's my bid. Who all's here real quick, and then we'll get to the stuff we got to talk about. I know first I want to say Ignacio Cervantes because someone said he wanted to hear me say his name. Let me do it with the echo. Ignacio Cervantes. That sounded like Antonio Banderas there for a second. Hey, what's up, Pepper? What's up, brother? What's up, Terry? Crypto Nitty Gritty. Yeah, I'm alive, bro. I'm doing better than I was the other day, too, because when we came back from Vegas, I was feeling rough. Everybody was. Tremaine the Great, what's up, dude? Good to see you. Bill Ash, what's up, my friend? I am Groot. What's up, dude? He's taking charting to the next level, by the way. He's got his own TA stuff that he does, too. I'll put up your link over there, brother. He teaches TA as well, in case you don't want to learn from me. You want to learn from him, too. I love seeing people on the come up. It's not all about me, everybody. It's not. This takes a team. It's not all me. It's everybody. And he's part of that. So put your stuff up there because somebody may want to take classes from you too. He day trades. He does a lot of swing trading, a lot of leverage trading, where I do a little bit of leverage trading. He does a lot of leverage trading. I'm more risk adverse. He seems a little more risk taker, where I'm more risk adverse. So, hey, we're all a little different here, and there's nothing wrong with learning from everybody. What's up, Jeremy? Cuzzo? Played some Rocket League with him today. Brett Walker just had a private consult with him. What's up, brother? Good to see you out there in Almond Land. Fonzie, what's up, dude? Joe D, Coin Collector, Hardy Boys, what's up, dude? Educated Dummy, what's up, my friend? Big Dex, David R, good to see you, brother. Juan Pablo, Axis, that's a dope name. Arturo Neski, I think I said that right. Kelly Slade, what's up, man? Good to see you. Shorty Guzman, Kobe Burnett, that's a dope name. It's probably your real name, isn't it? That's pretty damn cool. Richard Hoffman. Well, that sounds like MacGyver, even though it's not. That's Richard Dean Anderson, but Richard Hoffman kind of sounds like it. Manalo, what's up? What's up, Nick? Good to see you, brother. Mark Berrias. Nick had a wild ass trip home from Vegas, by the way. His shit got canceled on the halfway through and had to take other flights and do all kind of crazy shit. And what's funny is Jeremy got fucked up on the way over there. Showed up late to the airport. Had to take like 6 flights to get there, and we were on the same flight we were supposed to be. All right. What's up? Stifler? Good to see you, brother. Conley. All right. So let's look at the charts real fast. Everybody looking? There you go. That's about all I got to say about the charts. That's Luna. In case you didn't see that again, here's Bitcoin. Trash. Here's Ethereum. It's not great. Here's Algorand. Not bad. Here's CRV. It's trash. That's about all I need to say for charts tonight. Everything is bearish except a couple. And when the sentiment is 99% down, all of you should be setting in stables or taking profits or extremely pulling back on your risk level, which brings me to what we're going to talk about tonight, okay? Change things up a little bit and show you something different than what I would normally show you, okay? I'm going to move this over to a blank screen here. We can just type for a minute, and we can talk a little bit about risk management and portfolio management, which nobody likes to talk about. Everybody likes to throw money around and buy stuff and buy stuff and buy stuff, but no one ever really talks about what you should and you shouldn't be buying, okay? No one likes to talk about whether in a bull market or a bear market, how risk adverse or how risk intense you should be. Well, we're going to talk about that a little bit tonight. Let me answer some questions real quick first. He said, oops, I made it though. Aspiring Adult says, learning so much from being here. Thank you, brother. What's up, Ali? Good to see you. Just joined Patreon. What's the ultimate support for Bitcoin at the moment? 35, 36,000. There's a trend line. After that, it's rough. It's more like 27 or 28,000. That's what I see. There's a CME gap down there as well that very well could close. That's going to suck if it happens, but reality bites sometimes. And what are you going to say? There's also a CME gap around 18,000 right near previous all-time high before this bull run. That may close as well, but not all CME gaps close, just most of them, okay? So, portfolio management, okay, everyone? Let's take a step back here. Let's just sit and talk about this for a moment so we can make sure we get this right and do better about losing money. How about that? Everyone loves to make money, but no one likes to talk about how much they lose. So we're going to talk about it, okay? Portfolio management. Yeah, I spelled it wrong, but you'll remember it if I spell it wrong, all right? Two parts of portfolio management that I want you to understand, okay? It's not all about doing it one way. There's more than one way to do this, and I think you should probably use more than one way to do this instead of just throwing all your money constantly in the same pot or doing the same thing over and over again. I think it's probably best to do it two different ways, okay? So let's talk about those two different ways, shall we? One way is in a bear market, which we happen to be in now, okay? In case you haven't noticed, we're in a bear market. Yeah, we're in a bear market. Now you know, okay? We'll obviously label this other side bull market for everyone, so you know what I'm talking about. All right. Here's how I do mine. You're feel free to do your own, but I want to show you what I do and what I don't do and kind of talk about what my risk levels are, what my risk levels are not, what I'm willing to do and what I'm not willing to do, okay? I've lost money and I've made a lot of money and I've lost a lot of money and I've made a lot of money, okay? So it's not all perfect for me either. I'm no one special. I'm just a guy. But I think it's important to get different aspects from different people to understand different types of management. So there's multiple different kind of risk here, okay? I'm just going to use low, medium, and high risk for now, and I'm going to add one other spot to that to kind of help you understand what I mean. So we'll do high risk first. What is high risk? Well, I consider high risk trading because most people don't know how to do technical analysis. In fact, 95% of people don't understand what technical analysis is. 95% of people, when I say technical analysis, they have no clue what I'm talking about. Well, that's not us. We know more than most people. But for the people that are watching this or they're going to watch it later, trading is high risk. Okay? If you don't know what you're doing, you're going to lose. And I don't want to see you lose. I want to see you succeed. So I want to see you hang out with us and watch a lot so you can learn as much as you can. You can read up and you can study and you can actually learn from other people, not just me, right? But trading is high risk. I'm not stupid. I realize that, okay? What else is high risk? Degenerate plays. I don't do any degenerate plays. I'm not a degenerate and I refuse to be. I consider myself a step above degenerate. Like I consider myself normal. But if you're doing degenerate plays and you want to throw money around, understand that that's high risk even in a bull market, okay? Bear market, bull market, doesn't matter. That's all high risk. And I wouldn't take it, if I were you, that far. So let's do this. Let's do trading / degen. All right. Now let's do that in smaller text so it's not as big. So that high risk trading degenerate stuff. In a bear market, if you're going to do this in a bear market, which is a bad idea, but if that's what you want to do, don't risk more than 20% of your portfolio. Do not risk more than 20% of your portfolio in a high risk move, especially in a bear market. Okay? Anything more than that, and you're asking for trouble. 20%. Big print, 20%. Let's put that in yellow. Everyone can see it. 20%. No more than that. Got that? 20%. What do? I don't do any degenerate plays. I refuse to. You guys can do the math on what I make and what I don't make and what I have and what I don't have, okay? I'll tell you, I keep about 20,000 to trade with across all platforms, 20,000 to trade with, whether that's in Forex, crypto, stocks, equities, bonds, doesn't matter, commodities, I don't care. Whatever it is, 20,000 total. Every dollar that I make over 20,000, I take out and I move. And we'll get to where I move to in a second. But that's how I allot myself my money so that I don't do anything stupid, okay? Because I realize all of us get emotional from time to time, and you don't want to do anything stupid. I don't want you to do anything stupid either, okay? So, high risk trading degen, 20%. Medium risk. What do I consider medium risk? Let's write that. Medium risk, that 20, and we'll put it in white. What is medium risk to me? Medium risk to me is nodes. What kind of nodes? Well, strong block nodes or real nodes. That's kind of high risk for some people, and I'm going to call it medium risk because you do start earning money back from day one. Whether it's a lot or a little, you do earn something back. So I got to say that's less risk than high risk, okay? Also consider staking to be medium risk because while you earn a reward, this may be a bear market and you may lose money on the way down. That's up to you. That's up to you to make on your call. You know, hey, maybe those same protocols that we consider medium risk may evaporate one day and go away. What if Anchor Protocol disappears tomorrow? Whatever money you have on there, gone just like that. Now, do you consider that high risk? They do have VC backing, which venture capitalist money backing, and they do have a ton of money over there. So I don't think it's going anywhere, but you don't know for sure, right? So make sure that you monitor how much money you put on what you don't trust fully either. If you don't trust it 100%, then don't put 100%. Perhaps you only trust it 50%. Well, don't put any more than 50% over there. Make sense? Good. What else do I consider medium risk? Well, I consider DeFi medium risk. Why? Because while some DeFi is degenerate, which is high risk, most of DeFi isn't. Most of DeFi is much lower yields than you think. Okay? Sometimes pennies or dollars are made a day. Doesn't seem like a lot, but that's better than nothing, which would be high risk. So, medium risk on there too. So let's write that down. Here, we'll do nodes / staking / DeFi. I consider that medium risk. How much do you put in medium risk? Well, for me, in a bear market, I'd rather not have more high risk. I'd rather have more low risk or medium risk. So I'm going to bump this number up to 30%. 30% in yellow. Bam. Already 50% of my portfolio right there. High risk and medium risk. 50% of my portfolio. No more than 50% in a bear market would go into medium or high risk. That's still a little high, folks. I realize that. I also realize that we're in crypto, which is more risky than anything else in the world as far as investments go. So I'm willing to push it a little bit because, like I said, I consider us a little smarter than everyone else, okay? I'm not saying I'm a genius. I'm saying we're just a little smarter than the others. Fair enough? Fair enough. Now, what about low risk? What is low risk? Low risk meaning you have a very low chance to lose your money. How low? Well, that's up to you to figure out because everyone's a little different. Everyone has a different risk tolerance. But I'll show you what I consider low risk. I'll do that white. All right. For me, low risk is stable coins, just sitting in stable coins. Now, could there be a run on stable coins and they go away? Yes, they could. Okay. Is that going to happen? Likely no, but it could. Yes, Tether's a little shaky. Yes, USDC is 70% backed, but not 100% backed. Yeah, I get it. Anchor's backed by Luna, so it kind of needs this one to make that one work. And I get it. Okay. But I still consider them more safe than not safe. Okay. And we have stable coins. Let's use them. Stable coins pay you to do nothing. You could consider this medium risk as well. It's part of it. Or maybe you just want to hold your stables and put them in a ledger somewhere, which is perfectly fine as well. I have no problem with that. I have some stables on a ledger sitting right over here on my desk. I'm cool with that. That's a good idea to me. What else is low risk? Hate me if you want to, folks, on this one, but cash. Just straight USD or euros. Just sitting in cash is incredibly safe. Why? Because it's not going anywhere, folks. I said it. Yes, cash is going nowhere. It's not going away. Whoever told you it was lying to you. That's not going to happen. This is not a crypto revolution. The world is not going to end tomorrow, and we're not going to have no cash. It's just not going to happen, folks. So that's what I'm going to say here. Savings, whether that be cash or stable coins, I like to keep some no matter what. Okay? No matter what. So for me, low risk, your low risk may be a little different. One other thing that I would consider low risk would be a CD, a bank CD, or a treasury bond. You can get treasury bonds right now. I forget the cap on what treasury bonds are, but you can buy so much of them and they make you 5% over a certain amount of time. The government backs it. Do you trust the government? I don't really, but they back bonds. They've never not backed bonds before. And they pay a yield. Okay? Better than nothing. So there's another way to do it there. So, what would I do for low risk? In a bear market, probably 30%. So let's do stables. Oh, sorry. Click on the text. Let's do stables / bonds / cash. All right. May stake those, may save those, may earn a yield on them, may not earn a yield on them, may use them, may not. That's going to be another 30%. 30%, 28. Obviously, you get it. That only leaves 20% left. The other 20%, I'm never going to use. I'm going to keep in reserve, okay? I'm going to keep in reserve all the time. Reserves, 20%. I don't care what anyone says to me. I'm going to have this 20% sitting there just in case. Why? Because you can't tell me otherwise. You can't tell me not to save some money. I'm going to save some money. I'm going to keep it on the side just in case this shit hits the fan. I learned my lesson on this a long time ago. When you don't have savings and something comes up and you don't have the money, you'll sing a different tune. You'll sing a different tune and wish you had it when you don't have it. So keep some to the side. For me, I like to keep at least 20% all the time as a contingency. There's how I would use my money in a bear market. Now, how do we do it in a bull market? By the way, we're in a bear market right now, so this is what I'm doing, okay? And I'm not even using all of the 20% in my high risk. I'm using like 5% of the 20% to short and do some other stuff. That's it. Medium risk, yes, I'm full on staking. I've got DeFi going. I've got my nodes running, doing the best I can with the medium risk. Same way with the low risk. I'm full on staking every bit that I can. And of course, I have my reserves. That is legit how I'm doing things right there. Now, bull market's a little different. As a bull market comes around, you can increase your risk. You can bump up the numbers that you would, prior to this have. and do pretty darn well. We've already proven that because we did this last bull market. Okay. We had a lot of money in this. In fact, we had so much sometimes that we had multiple trades going. We had 10 or 12 trades going at a time. Obviously, that's too much. I think at one time I had like 17. I think a couple guys had way more than that, okay? They had way more trades going that at one time. I'm not saying that's a good idea, but I'm saying you can get away with that in a bull market because almost everything goes up. In time, you'll get your money back. We're not there right now. So, as far as savings go, when things pump up and it's a bull market and we're going and things are running and everything's going up, you can reduce your savings some. You don't need to save as much because you can likely make your money back. So if you want to knock your savings down to 10%, now's the time. 10%. Perfect. Low risk. Hey, guess what, folks? We're in a bull market now. We don't need to be having all this money in this low risk stuff in stable coins. We want to use this money to make us more money, to generate more income. We don't want to use it all. Okay. We don't want to take crazy risks, but we would like to take a little bit more risk and ramp our risks up to make better rewards. Risk reward is important. We'll talk about risk reward in a second. So that low risk stuff, I'm going to cut dead in half. I'm going to take half of my low risk away, making it 15%. 15%. Excellent. Guess what that means for medium risk and high risk? You can bump both those up. Damn near double. Not quite, but you can if you wanted to. So I'm going to take high risk from 20% up to 30%. Or you can make it 45% if you'd like and really push it. I don't like to do that. I like to mitigate my risk a little bit with some offsetting stuff just in case something bad happens. And we know the volatility of crypto can get a little wild sometimes. So I like to kind of pull back on that. So I'm going to take my medium risk up to 45%. 45% of my portfolio will be in medium risk. You get that? Pretty crazy, right? 45%. What would I consider medium risk? Obviously, I've talked about that before. Staking coins on an exchange because the value of the coins are going up and you're getting free coins. That medium risk is increasing your portfolio. Now that I've got high risk from 20% to, you guessed it, 30%, I have more to trade with now, which means I can do more trades at one time, which means I can rapidly increase my holdings at one time, which means every dollar to get over 20,000 will go into the medium risk stuff, thus increasing my medium risk. And once my medium risk crests over that 45%, I can take that 45%, roll that down into low risk. That low risk goes above 15. I will move that down into my reserves. Everything goes up and I reduce risk along the way. I don't like to take any risk that is not going to have me 4 times as much reward. How does that work? If I can make 12% on a trade, I better only be able to lose 3%. 4 win, 1 loss. Okay? If I don't have those kind of numbers, I tend not to take the trade. Why? Because the numbers aren't good enough for me. It's too much risk for not enough reward. If I can only make 10%, but it's a 10% risk, that's 1-to-1. That's not good enough for me. That's not good enough on a bad day or a good day. I'm just not going to do it. I would rather sit in stable coins and get paid to do nothing, or sit in nodes and get paid to do nothing, which is literally exactly what we're doing right now. Now, this is exactly what I've done with every single dollar I have. I can't tell you any otherwise, okay? This is it. This is 100% what I do. I'm not telling you to do the same thing, but I'm telling you to mitigate your risk. Everybody is taking way too many risks. Calm down. You are your own financial advisor. You must be more prudent with your money. Be smart. If you had a financial advisor, he would tell you to chill. You're your own financial advisor now. I'm not your financial advisor because I'm not even a financial advisor. I'm my own financial advisor. And I realize that along the way, I have taken too much risk. So from someone who's already done it, telling you, don't do it, take the advice. Don't take too much risk. Mitigate it. Be smart with your money. Let's answer some questions. We have a couple minutes. What's up, Sven? Good to see you, bro. Bill Childers, what's up? Shorty Guzman. The bull doesn't even deserve capitalization. It's that bad right now. Hey, what's up, bro? Good to see you. Insert God voice. You're stupid, dude. Gruesaman Xiao. Y'all, Steven and Keith are my fave. You guys collab and getting it in it. DeFi God. Oh, we're working on it, dude. Hardy Boy said DPEG. Inflation is the risk for cash. Yeah, I get it. But at the same time, there's pretty much a world war going on. So all the money just goes back to USD because no one wants to borrow anything from anybody else. So the value of our money goes up. Gold ain't going nowhere. Exactly, Ignacio. Hey, Keith, are these percent based on your 20K investment account or what? No Martini time. It's of all my money. You can do the math on what you think I have, but it doesn't matter whether you have $1,000 or $1 million. The percents are the same. Okay. Chop it up for you. As far as trading goes, 20% of my money is involved in trading right now. I'll do about 20,000. You can do the math on how much money I have to spend and how much my net worth is. Okay. I'll let you figure that out. But that's how much I trade with. That's 20%. Once we get going back into a bull market and I start making more money, I'll keep 30,000 over there to trade with. Okay. And that's in a bull market only. And then if we start flipping the bear again, I'm going to move that other extra 10,000 back out. I'll put it back into low risk and medium risk, and I'll pull the reins back a little bit because I don't want to lose that money. I've already learned this lesson before. Losing money is no fun, folks. We do technical analysis for a reason, and it's to save money and make smarter decisions. We have to make smarter decisions than everyone else. We have to be out front. Why? Because everyone's watching us. That's why. Do we really want to be the guys that lose all the time? No, we don't want to be that way. We want to be the guys that win. We want to be the guys that teach, not the guys that get taught. There's nothing wrong with getting taught, but everyone here is a little smarter, okay? Because you're a little smarter, you can do the teaching too. There are already other people doing the teaching now, okay? Drizzy teaches stuff. Groot teaches stuff. Steven teaches stuff. Okay, listen, people, we're growing. We're getting smarter together. And because we're getting smarter together, the community is going to grow. I know it may not seem like much. We only have 45 people on here. We only got 40 likes. I really don't care about that. I'm going to share this video all around social media anyway, so we may get more views off of that regardless. It's not about that to me. It's about people getting smarter. I only want people to watch so that we can get a bigger, smarter ecosystem together. And I think that's achievable. What percentage do you allocate towards stocks? In any given time, it just depends. Whatever, each trade would never be more than 5% of the 20%. So let's say I wanted to take 5 stocks. I would do 1% for each one, max 1% for each one. I would pick a stock, Tesla, let's say, and I would put 1% in Tesla, or 1% into a Tesla futures trade, or 1% into a Tesla option. But that would be it. I wouldn't do any more than that. And I usually never do more than 5 trades at a time, because any more than that just jumbles my brain and I get stressed out. And I ain't going to stress over this shit. It's my job. I'm not going to get stressed over this anymore. Part of the reason I quit my job was to not stress. No dinero es no bueno, stupid dude. For me, DGen would be all BSC plays, fake nodes, meme coins. 100% Hardy Boys. I agree. But for me, high risk is trading. DGen is nothing I'm going to do. I'm not going to be a DGen. I'm just not going to do it. There's a reason only 5% of traders win over a long period of time. We are the 5%. You're damn right we are. We're the 5%. And we're going to grow that to 6%. That sounds crazy, but we're going to do that. We're going to grow this into 6%. We're going to be the people who help it grow to 6%. So, look, that's 30 minutes. It goes crazy fast, right? So, we'll be back tomorrow. I have a European stream at 1 o'clock. I got to go buy some paint and paint supplies because I got a fence to paint tomorrow. I have no idea how I'm going to get all this done, but I'm going to try to figure it out. Thank you for watching. I appreciate each and every one of you guys that come on here. I don't care whether it's 5 people or 5,000 people. It doesn't make a shit to me. I appreciate each and every single one of you. In the words of the late, great, notorious B.I.G., y'all could have been anywhere in the world, but you chose to hang out here with me. I can't tell you how much I appreciate that. Y'all be good, y'all. I'll see y'all next time. Peace.